One thing I've been looking at recently is that even as implied correlations on the S&P 500 start to creep in, we're seeing realized march higher. We're having all or nothing days, whether it's to the upside or the downside. What do you make of this? And is this kind of a sign that the market expects the fever that we've been in to break?
Yeah, I mean, I think we're seeing some volatility snaps. I mean, there's no question, right? I mean, the VIX got down to around a 15. It looked like volatility was kind of coming down a little bit, and then, of course, on Friday we got a nice snap up in volatility. So, I think single stock correlations are going to be a little bit higher in the short term. But as those effects start to come off and people realize that the trade war, there's a lot of banter there, but perhaps that kind of falls away in the next couple of days, couple of weeks. We may see that volatility come back in a bit.
Beautiful, and I'd like to get to your trade because it is a trade war hiding place, and ironically, it's not rate sensitive at all. It's got nothing to do with rates, not UTs, not REITs. So tell me what you're thinking about here.
Yeah, sure, and I kind of go back to the same playbook, right? I mean, it feels like with the trade war, it's been going on for a while, so it's a little bit of deja vu all over again. So I kind of go back to the playbook of really looking at quality names that are a little bit buffered and don't have as much exposure to the trade war. So I like software names. It's been a theme that I've been playing now for a while, but those names keep coming in, right? When the VIX does spike like this, all names kind of come down with it. That's where I really look for relative strength. Software, names like Coupa Software, Zendesk, Workday, which reports this week. Salesforce had some great numbers last week. So that's a group that I like to keep coming back to as long as it holds support.
And that's the IVG ETF you're talking about here, and some of the big weights there. You mentioned you got Salesforce, Adobe, Microsoft. And one thing I was wondering, what's with the January timing of this bet? Is this more, you need time to let the dust settle, or is this more kind of looking at, hey, at least I know we won't be in a recession until January, so we've got some time for this trade to run and risk to appetite to return?
Yeah, I just think that we're definitely not out of the woods yet in terms of volatility. I think it's a little bit, it's always unclear, right? But I think it's a little bit, larger presence of uncertainty. So I think giving this trade a long time, and especially when you look at a 4 or 5 year chart, you could see software is outperforming. So no rush in this trade going out to January and putting on a call spread, 225, 240 call spread, which you can get into for around $5.